We heard a lot about strategies, online informations, money management, so I'm not going to repeat all of this. I want to go into something more clear, more interesting for you to be able to apply all these strategies and informations you've been gathering for a very, very long time, which is actually the science behind trading, which is the thing that is the base for all the informations that you're getting, to be able to apply it in the correct way. And when I tell you this, I'm telling you about a science that's actually geometrical, which is actually was not made for trading. It was made way long from trading. It was made like maybe 500 years ago. And this science is applied on everything that has energy and moves. And this is how we can calculate the distance between Earth and the Sun, the temperature tomorrow, the speed and the meeting points. So it's a very, very big science. But of course, I'm not going to scare you and tell you have to go through all of the science. You need to know what you need in the science so you can become a successful trader, apply all these noises that you hear everywhere, online, offline, everywhere, to make sense to you. So I asked for a board, but this is the biggest. I hope you guys can see it. So I want this to be more like a workshop. So when I say it's a geometrical science, I mean it's all based on circles, triangles, centers. If you know how to understand these, you will understand the main core of trading, which is the technical analysis, the charts. Charts is actually a language. When you see charts, everybody sees it in a different way. But technically, if you break the code and understand this language, you will be able to identify the market even without any indicators, without anything to give you signals. These are just accessories. And if you know how to use them in the right way, this is how you'll be able to get an entry and exit clear point and become a profitable trader. And this will take time. So when I say geometry, I mean, I hope you all can see this. So when I say geometry, I mean, let's say, for example, we draw a circle. I hope you can see it. Circle has a center. And if I make lines through this center, I will have 4 triangles. And each triangle has a center. If I connect them, I'm going to get another circle inside. Let's open this circle and make it straight. Like an orange, cut it and make it straight. What I will see? I will see 4 triangles, right? Are you with me, guys? So this is how the charts works actually. It's all about centers. So let's say this is the price moving between 2 levels, support and resistance levels. And where's my 4 centers? Here are they. If I make a line through this center, what do I get? I get the center of the next triangle that didn't happen yet. So I can see the center of the price for the next triangle, which is going to be here. If there's any changes going to happen to this price center, what's going to happen? So if the price goes down and give me a push from here, I have a gap, means that there is buyers going into the market. Who moves the market? Not me, not you. It's the big funds. And these are the ones that they catch the opportunity first. We just follow. It's like big fish, small fish. You know, in the sea, the big fish has small fish swimming across. Why? Because they want to go through the same direction, so they are protected by the big fish. And this is exactly how we trade. We want to follow the market, find the direction, find where is the interest of big funds going. So we can go the same directions. And when they get in, they can shift this center. And then you will find the shift in this center that breaks it and take it to a new level. Here, this can no longer be my center. I have a new center now, which is higher. There is a rule that we always hear. When the price breaks, it has to come back and test the broken level. Now we understand why, and this is very important to know. Everything you hear has to make sense to you, and you need to know why. So when we see that the price go back, actually the price still has transactions inside, volatility that needs to take it out. This is my new center. Now the center is going up. This shows that the average of power of price has shifted. Nobody can move the market by his own, because there is supply and demand. Not everybody is opening positions in the same time with the same strategy. Here shows that the center, the new center, the price will apply, keep going, and this is my new channel. And this is my new centers that I'm applying in. Every time the price will go down, it will be a good chance for the following traders to enter, and they will keep filling in the price, filling in the price. This is what keeps the movement to push up higher until it reaches somewhere where the big investors think it's enough. And this is a very good chance to get out of the market. And this is when the big money goes out first. How the effect will be on the market? Is it going to just take the market down? No, because not everybody will close on the same time and collect the profits. People go out gradually. You will see that the price slow down. You will tell your friend will tell your friend, and so on. And then people will start to follow and go out gradually. So it needs time to take out the volatility, to break and go to another direction. That's why, for beginners especially, you will find that when you are selling, the price go up, and then you say, oh, it took your stop loss, but then it went down again, and then you say, if it didn't close my stop loss, I wouldn't have been making profit now. But now you need to understand why. Because the market has to go into stages before taking a new direction. And this is what happens here. And they call this pattern actually, maybe for example, a head and shoulders. Now my center is broken again. This center is no longer applied, become lower. This is a signal for what? A signal that we are going into a new curve. And this shows that we are going to a new level. Can the market just go down like this and ignore everybody? No. This needs something big to happen. Like 11th September, like something like this, where everybody agree on the same time that now is the time to click. But in a normal conditions, market has to go always up and test before breaking the levels 1, 2, 3 Fibonacci numbers and go through a different center. But this might be easy to understand. However, what I want to clear more, when you come and trade, every trader has a preferred charts. There's different time charts, from 1 minute to 1 month, and from 1 month to 1 minute. This is a zoom in, zoom out. You need to know which size are you trading to plan your money management correct, so you can have a good entry point where you can enter with a minimum drawdown. So every chart pattern technically is part of another pattern. It's a repeated thing. It keeps repeating, repeating, repeating. So let's say if this is half an hour chart, how it will look like in a 4 hours chart? It will look so small. It will look maybe this. Right? So if I zoom out and go to a bigger frame, I will see this is part of a bigger movement, of a bigger center. So every center of power actually is part of a bigger center movement of power, and so on. So you need to know how to read the charts from big to small, to know the main direction, so you can get the small direction inside where is the best area to enter. And this could look the same, just like this. And this is a bigger center, and here we have a center. And the same thing, if the price gets more push before reaching the level, it will break the bigger level and break in and go up. If it breaks down, it will go down. and so on. The main thing I want to use this time to tell you is that there is a science behind this. You have to be ready to make your own strategy so you can be successful in trading. Not only just hear about a strategy that will make you money. If there is one strategy that makes you money, everybody will just copy it and be rich. So you need to know which strategy to use, in which instrument, in what time. There is times for this strategy, there is times for this strategy. There's times to trade gold, there's times to trade currencies, there's times to trade commodities. So this, when you have the full awareness of trading and the science behind it, you will be able to understand how to identify the markets. And this is just a very small information, how to define, how to use the indicators as well, such as moving averages, MACD, RSI, all of these, how to make them help you. It's accessories to be able to identify the right enter and exit point. You will hear about strategies when two moving averages cross together, it's a signal for buy, it's a signal for sell. And what happens in reality when you buy and sell? It always, most of the time, doesn't work. But when you know how to use such a tool like moving average, what does it really represent? What does it really do? It will be part of the combination of your strategy, of your evaluation of the market. And this is when you will know such a moving average will help you for what? When you want a signal from MACD, for example. What do I need now for MACD? Do I need MACD or I need RSI or which indicator is the most important for me? And this is how you'll be able to identify. A moving average of 250, for example, can give you a signal of the center going to up, center going down. This way, when you will open the charts, you will be able to read it in a better way as a language. Of course, this information is not everything. This is maybe 1% of the full science and the full information. I'm just trying to give you an idea of the direction where you should be focusing on, where you should be going to, so you can understand that it's all based on science behind it. It's not just betting, it's a science. So here, for example, if I talk about centers, you will see that this is a triangle, here's a center, this is a triangle, here's a center. So if you see this, what you will say? That the next center is high. And if the price wants to go down, I need to have a lower center after this. Only then I will see high. And this is part of a bigger frame, which is actually going sideways. So the small frame is part of a bigger frame, part of a bigger frame as well. So in a bigger frame, we're going even more sideways. So this actually was a up inside a sideways, inside a sideways, inside a bigger sideways, and we are actually now very small up on the top. This was the big trend in the smaller frame. Now you see it very small. In a bigger frame, we're even in a flag, it's a pattern. So if you want to trade, which frame are you trading? You need to know how to break it down. You need to know how to break down the picture to understand the point where you are standing and how to use it to the maximum. And how to use your money management. This is very important part in trading so you can minimize your risk. And one more thing I want to tell you. When you think about trading, always think about one thing. Not one trade will make you rich. The whole thing is about repeat. How to do it successfully and can repeat again and again and again. I'm trying to talk from the technical analysis side because technical analysis actually is most of us what we need because we are most of us not trading with millions of dollars. We are considered small traders in the market. So we need to have a very, very sharp, detailed entry and exit. And this is where technical analysis helps us the most. Of course, there is fundamental analysis, which is the news. Yes, it plays part in trading. Yes, but you cannot trade fundamental only. Usually traders with a smaller capital, they only worry the news time to take some advantage of the volatility, but they're still trading with a very small scale. So they can have a fast entry and exit. You don't want to stay in the market for very, very long days and months and pay swap on a very small capital. your interest is to grow your capital, and your interest is to have more transactions, successful transactions, a repeat. So the main thing is to get the right information, to build on it, and to be able to go through this path to create your own strategy. Yes, a lot of strategies will help you, but it will help you only to create your own strategy. This is when you will know that you're a successful trader and you are ready to trade. And when you will make small profit continuously, it's much better to do this with low risk than to go with a big risk, with a big profit. It will not happen that easy. We care about guiding you the best, and we care about giving you the information first. That's what we do. We give our service to you, but we care about giving it to you honestly and put you in the right direction. So, me personally as a trader, I trade in Kama for this reason, because of these goals, which is very important for a trader. And to make the trader successful, your success will be our success. We're in booth 42, and I hope if anybody has any questions about what we're saying, you can ask me now if you want, or you can come to our booth. You're most welcome to ask us about any information you want to get further. We can maybe schedule for you some courses, attention in trading or follow-up. Me personally, I've been this in 25 years. I'm doing good trading now after many years of practicing and information. And I know it's not an easy journey. That's why I care the most to give you this information, so you can have a clear idea of what's coming next. The most important, remember, is the money management, where you really need to focus on when you have a strategy. When you reach this point, you will still have this challenge, and it will be about money management. Once you will have a good strategy, and you will see that it can make profit, you will go to the next challenge, which is money management. The money management rule is 2%. Remember this, it's very important. Don't lose more than 2%. It accumulates, and when it accumulates, it will take you to a downturn. Believe me, your account performance, when you open the account performance, it also has a chart. And this chart also works with the same side. Even when you want to withdraw, you need to know when to withdraw, not to break your performance. Even when you want to withdraw your profit. Actually, everything in this world works with this. Even your heartbeats. This is how, if you go to the doctor and you say that in the doctor room they have this chart for the heartbeat, it also works in the same way. It's all about anything that moves with energy. How to understand the energy movement, how to understand the changes, and how to identify the new directions. So, very important to understand these things to be a successful trader. Also, the right investment. Don't think that you will make huge profit or huge difference if you deposit a small deposit. I understand a lot of people saying you deposit $100, you will be able to do. Let's be logic. This investment has to back up, give you space, so you can trade. $100 investment will not really be promising as you think. So instead of burning hundreds of dollars, wait until you are confident and put a real investment. Otherwise, you'll be trying to invest to recover. So a very good investment size is something you have to think about when you are ready. I hope you all enjoyed this, and I hope it adds benefits to you. And if you have any questions, as I told you, please feel free to ask me, or you come to our booth 42. You're most welcome. We'll do our best to help you. Thank you very much, and good luck for you all. Great. Thank you.